The Monetary Policy Committee, MPC, of the Central Bank of Nigeria, CBN, held its 300th meeting on the 19th and 20th of May 2025. The committee reviewed developments in the global and domestic economies, including the risks to the outlook. All 12 members of the committee were in attendance. Decisions of the MPC. The committee was unanimous in its decision to hold policy and thus decided as follows. 1. Retain the MPR at 27.50%. 2. Retain the asymmetric corridor around the MPR at plus 500 to minus 100 basis points. 3. Retain the cash reserve ratio of deposit money banks at 50% and merchant banks at 16%. 4. Retain the liquidity ratio at 30%. Considerations. The MPC noted the relative improvements in some key macroeconomic indicators, which are expected to support the overall moderation in prices in the near to medium term. These include the progressive narrowing of the gap between the Nigeria Foreign Exchange Market, NIFEM, and Bureau de Change, BDC windows, the positive balance of payments position, and easing price of PMS. Members also noted with satisfaction the progressive moderation in food inflation and therefore commended the government for implementing measures to increase food supply, as well as stepping up the fight against insecurity, especially in farming communities. The MPC thus encouraged security agencies to sustain the momentum while government provides necessary inputs to farmers to further boost food production. The committee, however, acknowledged underlying inflationary pressures driven largely by high electricity prices, persistent foreign exchange demand pressure, and other legacy structural factors. The MPC noted new policies introduced by the federal government to boost local production, reduce foreign currency demand pressures, and thus lessen the pass-through to domestic prices. Given the relative stability observed in the foreign exchange market, members urged the bank to sustain the implementation of the ongoing reforms to further boost market confidence. The committee also called on the fiscal authority to strengthen current efforts at enhancing foreign exchange earnings, especially from gas, oil, and non-oil exports. The MPC, however, expressed concerns about the recent decline in crude oil prices attributable to increased production by non-OPEC members, as well as uncertainties associated with U.S. trade policy, which present new challenges for fiscal receipts and budget implementation. The committee reaffirmed the continued stability of the banking system following notable improvements in key performance indicators and observed the appreciable progress in the ongoing recapitalization exercise. Members thus called on the bank to sustain its effective oversight of the industry to ensure compliance with regulatory and macro-prudential guidelines. On the strength of these considerations and driven by the continued uncertain policy environment exacerbated by ongoing global shocks, members weighed the available policy options and were unanimous in their decision to hold policy to enable a better understanding of near-term developments. Members reaffirmed their commitment to prioritize policies targeted at anchoring inflation expectations and easing exchange rate pressure. Key developments in the domestic and global economies. According to the National Bureau of Statistics, NBS, headline inflation year-on-year declined to 23.71% in April 2025 compared with 24.23% in March 2025. On a month-on-month basis, it also declined to 1.86% in April 2025 from 3.9% in the previous month. Both food and core components contributed to the decline in inflation in the period. Food inflation eased further to 21.26% in April 2025 from 21.79% in the previous period. Core inflation also declined to 23.39% in April 2025 compared with 24.43% in March. Real GDP year-on-year grew by 3.84% in the fourth quarter of 2024 compared with 3.46% in the preceding quarter. This improvement was driven by both the oil and non-oil sectors, with the services sector being the major contributor. Gross external reserves increased by 2.85% to $38.90 billion as at 16th of May 2025 from $37.82 billion at end of March 2025. This represents an import cover of 7.6 months for goods and services. The balance of payments recorded a surplus of $1.10 billion in the fourth quarter of 2024, compared with $4.21 billion in the preceding quarter, on account of moderation in current account surplus. Although global output growth is expected to remain positive despite existing and emerging headwinds, the International Monetary Fund, IMF, downgraded its global growth forecast to 2.8% in 2025 and 3% in 2026, compared with 3.3% in 2024 due to the uncertain policy environment. Members were thus unanimous in their resolution to maintain close surveillance of developments in both the domestic and global environments to enable appropriate policy response to emerging shocks. The next meeting of the committee is scheduled to hold on the 21st and 22nd of July 2025. Thank you.
Thank you very much, Mr. Governor, sir. That was communique number 157, presented by the chairman of the MPC and the governor of the Central Bank of Nigeria, Mr. Olayemi Kadusu. We will now take some questions from members of the press. Please state your name, your medium, and ask your question. Thank you.
Thank you, Mr. Governor. Good afternoon, members of the MPC. My question is around big players that are starting to better Nigeria's macroeconomic comeback story. Recent assessments, of course, suggest that the IMF loan paid, World Bank giving a nod to ongoing reforms now. We also saw, I think, Fitch ratings. We also saw Fitch ratings just, I think, a few weeks ago, boosting Nigeria's outlook from stable to positive. On paper, things are looking up, but inflation keeps biting. We just got a report from NBS, I think, was it on Monday or so, that inflation now is at 23.78%, still double digit from 24.23%. The real question actually is that if the numbers say we're on the right track, it still does not feel that we're on the right track for Nigerians. How do Nigerians interpret this into meaningful impact? That is my question to you, Mr. Governor, because inflation is still biting, prices are still there. Nigerians are still, it's still hard for many of us living in the country. Thank you, Governor.
Thank you very much, Nancy. First of all, let me make the comment that the Fitch upgrade is particularly important because it was coming at a time where there were global economic headwinds and shocks, and there was a lot of uncertainty. So it's important for us to realize that in spite of all that, there was a move by Fitch to upgrade. And I think that is a very, very positive signal. It's a very, very positive measure. Now, in terms of how this whole macroeconomic fundamentals are playing out, in spite of the fact, like you said, there have been positive endorsements from all kinds of bodies that make it a point of duty to observe and critique the moves that various countries are making to ensure they have stability in their economies. And your question basically is, well, that may seem positive, but how does that translate to getting the feeling that things are better? Now, I think it's important to say that investors, and let's face it, without investments, economies don't grow. Investors don't go to where there's instability. So I think that is the first thing to understand. On the journey, and this is a journey, investors don't go out to invest to lose money. They go out to invest because there's stability in an economy and they can plan. With that stability comes confidence. With confidence comes investment. And with investment comes growth and output. I think that's definitely the trajectory that you will find in all countries of the world. We obviously have been through a long period of instability. And I think that clearly what is being recognized is that the Nigerian economy is now stable and there's interest in those who want to invest to now invest. Clearly, the inflation numbers themselves speak for themselves, and I've discussed that here, I've mentioned that here, they speak for themselves. The overall trajectory is in the right direction. Not one particular aspect of managing the economy is a bullet that will solve all the problems. It isn't. It's a multiplicity of different endeavors. And that is why the combination of the efforts that are being made and are yielding results in terms of stability. And don't forget, the central bank is the custodian of stability in an economy. If you look at the exchange rate, for example, volatility has reduced from over 4% a year ago to less than half of 1% around now. So that's an indication of stability. And with the increasing collaboration between the fiscal and the monetary side, definitely the journey that we are going through will begin to yield greater results as time goes on. I have no doubt about that.
Good afternoon, Mr. Governor. My name is Nduka Chejin of the Nation newspaper. I have 3 questions for you, quickly. One, Nigeria recorded a 6.83 billion naira balance of payment surplus in 2024 from the result released recently. This signals a renewed economic momentum. But with the rising global risk and the threat of external shock, how is the CBN assessing the sustainability of this surplus? That is one. 2, with external reserve rising from $36.6 billion in 2023 to $38.8 billion in 2024, how does this strong reserve position enhance the bank's ability to stabilize the FX markets in the face of ongoing global uncertainty? And then thirdly, we've seen currency depreciation following the global response to the U.S. Liberation Day tariff. How are you preparing Nigeria for the resilience amidst heightened global uncertainty? Thank you.
Thank you very much. Well, on the issue of depreciation of the currency, which obviously everybody is always very interested in, the way I will put it is to say that if you look at and make the comparison between Nigeria during the last month or so, month or two, when the whole issue of global tensions got heightened. And let's face it, right now we're in a period of heightened uncertainty. And if you are all observing, you find that the various currencies of the world were under attack and were having to defend themselves. You find that relative to other countries, Nigeria came out very well indeed. We were able to ensure that our depreciation was very, very modest and that the stability was pretty much there. And that, in my view, was a reflection of a lot of the measures that we had taken prior to this time to stabilize our economy. I dare say that if those actions had not been taken when they were, the results would have been a lot more disastrous. Well, it would have been not even more, they would have been disastrous for us. They would have been disastrous for us. So it's a good thing that we started these reforms early and that we stayed the course to the point where we built buffers which are able to withstand shocks that come in. And that really sort of dovetails into your issue of reserves. As with our reserves, and here again, it may be necessary to just make a slight digression to re-emphasize what I'm about to say. We published our reserve numbers recently. And if you observe there, our reserve numbers went up from net reserves went up from slightly over 3 billion US to about 23 billion US, which was a quantum leap in our reserve position. Okay. Again, I would say that all these are happening as a result of transparency in process, ongoing reforms which are giving confidence to many players in that industry who perhaps had been on the sidelines up to that point in time, and are bringing about the results. And I always say that the numbers speak for themselves. Beyond the gross reserves, which are at 40 billion as at that time, the net reserves have grown quantumly. And that will continue to be, and that will continue the path whereby we will ensure that we have sufficient buffers beyond the IMF 6-month import cover to ensure that we continue to keep our economy in a safe and sound mode. The sustainability of the surplus you talk about, and again, I must comment that in itself speaks volumes, because you have a situation where beyond just oil prices, in fact, if you look at the oil sector itself, you'll find that the importation had gone down with the Dangote refinery and all the other refineries coming up. The demand obviously will go down. The gas exports have, been on an upward trajectory. Now that we have a competitive currency, and it's something that you will hear me talk about over and over and over again. Our currency now is more competitive. So this should encourage exports. And indeed, for us as Nigeria and Nigerian businessmen, the opportunity to extend that dragnet into our sub-region is also an enormous opportunity now that we have such a competitive currency. So, to answer your question, my belief is that if we continue doing the things we have done up to this point in time that have resulted in a positive surplus, we should be able to, in fact, improve that without too much of a problem.
Mr. Governor, sir, members of the MPC, my name is Sarah Chimoku, Channels TV. Most recently, we saw you engage with Nigerians in the diaspora, as well as meeting with investors to see how they can invest in the country. And then most people have described this initiative as commendable. But the question is, how do you hope to sustain this momentum and then restore confidence, especially with a budget that has been described by many as unrealistic? And then the second question is, how can Nigerians and investors trust that the bank won't fall back into the same old habits that damaged credibility in the past? Thank you.
Thank you very much, Channels. I won't only take your word for the fact that this happened, but Channels was very well represented at a couple of these fora, so thank you very much for that. Well, first and foremost, let me say that something I've constantly said and will repeat is the fact that we are, at the central bank, we are on a mission to restore confidence and build back trust. We're in a mission to restore confidence and build back trust. And we appreciate the fact that in this journey, we need all stakeholders to find that they are dealing with a central bank that will not disappoint. And that is the reason why some of the things we did and we have done up to this point in time, it may seem like nothing, but it's a big deal. For example, when we talk about publishing our net reserves figure and doing it, there's a reason why these things happen. People have to know that when the central bank says it is going to do something, it does it. We recognize that there's a need to rebuild our institution, the central bank. We recognize that. And I assure you that we are doing everything possible to ensure that that happens. It isn't something that will happen overnight. It's not possible. There are a lot of areas that we literally need to reset completely and start all over again. And we are doing so. But those things do take time. They do take time. But what I want to assure you is that we will be consistent as we have been over the past 18 months. And we believe that once we continue in that direction, we will be successful in building back the trust that has been so badly eroded over a period of time. I'm happy and pleased, I must say, that particularly in the international arena, and you mentioned it, both the IMF and World Bank meetings, and the very successful outing that we had in the NASDAQ building in New York, the feedback from those particular engagements have been very positive. And I recall that there was a particular, the person that moderated one of these sessions was quoted as saying that they have been covering these activities in Nigeria for so many years. And this is the first time that they have seen so much interest in investors coming to Nigeria, that it is no longer a question of should we be there. It is a question of when we will be there.
Good afternoon, Mr. Governor. Good afternoon, committee members. My name is Musa Abubakar with NTA. Well, recently the central bank has announced major changes to documentation requirements for Pan-African payment system transactions in Nigeria. My question is, what prompted this decision, and what impact do you expect to have on cross-border border trade?
Thank you very much, Musa. Let me first say that, as you said, your question is one of your questions is what prompted this decision. And I want to say, for the avoidance of doubt, that this is something that has been long time coming. It should have come earlier. But in any case, be that as it may, it couldn't be coming at a better time. And the reason is as follows. As I had said earlier, we have a relatively more competitive currency. There's already a lot of trading that takes place, especially in the sub-region. Okay, a lot of trading takes place there. And much of what you find is that those who trade in that route are subjected to enormous risks. Doing it with a payment system that is secure and safe will eliminate those risks. You know, one of the outcomes of the discussions we held at the spring meetings and also in New York was obviously the concern with respect to tariffs and the impact that tariffs have on economies. And increasingly, the discussion started to come up that various countries should see means of collaborating, amongst themselves, particularly on a regional level. So I believe that having a payment system that is safe, secure, and can be relied on is a step in that direction. It will automatically put people who up to this point in time, as I said, had used risky means, moving physical cash from one place to the other, that's all gone. And I realize also that sometimes it takes a while for people to test these systems and to have confidence in them, which is understandable. But I just want to say that, they don't have to. Okay, and that if that payment system is well ingrained with the openness of economies, especially now that we know that the risks to global trade have become a lot more uncertain, this could be a means of ensuring that the catalyst for trade in the sub-region is set alight.
Good afternoon, Mr. Governor. My name is Isa Abdullah from New Telegraph newspaper. After a long pause running to many years, the central bank recently published its annual financial statements. What are the major takes for the public and the financial analysts of this bold gesture?
Thank you very much, Abdul. I think the first thing I would say is perhaps talk about what the major takes should not be. Because sometimes there's a tendency for people to misunderstand certain things. The central bank is not a commercial bank. And for that reason, I wouldn't want those who are looking at our financials to compare the indices of the central bank with the indices of other banks. I wouldn't want that. And if you think about it, it is for good reason that you typically only have one central bank in any country. You don't have to. It's for good reason. Okay. So I think it is important that in terms of takeaways, one of the first major takeaways is transparency, accountability. We must publish our numbers. That's the law. And so we do. Okay? And so we do. We must publish our numbers. And we did that. So that in itself should give confidence to everybody that the central bank is walking the talk. Those who make it a point of duty to understand the complexities of a central bank and its operations are really free to discuss, to come, to ask questions, and they do. So that is something that we are very, very open to continuous engagement. And as I said, they do. The other thing that is important takeaway is that this should help to validate certain things that we say during the course of the year. Again, the net reserves figure. I recall when it was first published, there were some skeptics who felt, oh, they will only believe it when they see the audited financial statements. Well, so the audited financial statements are there. So as I said, this also helps to validate certain things that go on within the central bank, and also to show something we continue to talk about, that is the uncompromising stance that the CBN has taken with respect to the way of travel with respect to orthodox monetary policies. Okay, if we're not employing orthodox monetary policies, you will know. So these are all part of the takeaways, important as it is, but again, as I said, it should give you confidence in the fact that we are walking the talk. If we are supposed to be producing our statements on a regular basis, we are doing so. It gives a better sense for those who dig down into it to have an appreciation of the challenges that this central bank inherited 18 months ago. For example, if you compare the numbers for 2023, you see a huge loss of over 1 trillion naira, and within a year it had been moderated to about 30 odd billion naira. That again, as I said, gives an indication of the extent of the challenges that the central bank has been through over the past 18 months or so.
Thank you, Mr. Governor, sir. It seems because today I didn't say they are entitled to one question. They've asked several questions in one. I have the last question from Lume Ihega of the This Day newspapers in Lagos. It's another lengthy one, sir. She said, last week, the CBN and NIBS launched the non-resident BVN. That's the platform, which has received positive feedback from Nigerians in diaspora. However, trust remains a major issue, as it still costs more for Africans to send money home compared to other regions, and more remittances go towards basic household needs. Meanwhile, other countries like India have built strong economies around remittances by offering attractive investment products and maintaining trust. How is the CBN planning to close this trust and product gap? Thank you, sir.
Thank you very much. Thank you very much. First and foremost, yes, I agree. There is a trust deficit. I fully agree. And we need to understand where this trust deficit is coming from. Okay. Now, on average, 7% to repatriate money from overseas to Nigeria and to many emerging market economies. Clearly unacceptable. Totally unacceptable. And it is something that I was so concerned about that at the last spring meetings, I actually took it up with the president of the World Bank, and I solicited his cooperation and ideas as to how we can bring this down. One of the areas that is clear to me is what we are starting to do now, which is volume. It's a volume business, really. And I think we're heading in that direction. And I believe, honestly, for those of you who were not there, the recent bold step we have taken with the NRBVN is a game changer. It is really a game changer. It is something that the diasporans have been waiting for, and now that they are going to be able to transact their business from overseas relatively seamlessly, the opportunity for them to invest in the country of their birth is now limitless. And I think it couldn't be coming at a better time for them. It could not be coming at a better time for them. However, that does not bridge the trust deficit you refer to. I think fundamentally there are certain things that do need to be done to ensure that that trust deficit is bridged. And top of the list, in my view, is KYC. We've got to be able to ensure that we have a strong and very robust system in place that screens those who are coming to use these facilities. And that, in conjunction with NIBS, has already started. To ensure the response has been very good, but care is being taken to ensure that we do not get ourselves into any trouble. And hand in hand with that is the need to get off the FATF list as well. You see, by the time you're doing things like this, those who would send money back are more comfortable. They are more comfortable in embracing the products that are there. You also talk about the product gap. That, I'm happy to announce that we have carried the banking system along with us on this journey. When we decided to focus on the inward remittances, we started first and foremost by reaching out to the IMTOs. And that was a very successful endeavor. In addition to that, we moved on to those individual diasporans who are very successful in various endeavors all over the world. They are very successful all over the world. We reached out to them, understood what the issues were, understood what the bottlenecks were, and we went back, sharpened our pencils, got the banks involved with us. And some of you may remember that the previous meetings, annual meetings, we had an engagement where the banks were taken along with us in Houston, Texas. And that, again, was very successful, with the result that the banks are coming up with innovative products to encourage the diasporans out there. And in fairness to the banks, in fairness to them, many of them have wanted to do this for some time. I guess there were bottlenecks in between that prevented them from embracing this particular opportunity. Many of them have wanted to do this. So now that that has been cleared, they themselves are committed to ensuring that they can put out products that will suit the diaspora in the way they want. I want to close in saying something on this particular question you've asked. I want to close by saying something. Number one is that we have a target of $1 billion a month of getting inflows from that segment of $1 billion a month. It may seem like a tall order, but it isn't. And I remember when we first engaged on this discussion, people laughed and thought that nothing was possible. And we went from 200 odd to about 600 million US peaking at one point in time in the month. Okay, so this is the Nigerian spirit at work. There's nothing that will stop us from getting there and even exceeding that. At one point in time, you look at a particular segment where there was nothing, and then you wake up later and you will see so much that has come from pretty much being a bit creative and being conscientious in knowing that this is something that others have done, and you said it earlier there, Pakistan, India, other countries have done it. Why can't we? And then the other thing I want to say that I think is very important, and that is that this is a reflection of what can happen going forward when government gets out of the way and allows the private sector to move forward. And this is basically what we've done. We've acted as a catalyst. We have carried the private sector along with us. We've not said that this is the responsibility of the central bank. It isn't. In the beginning, perhaps we had a larger responsibility, or we took it upon ourselves, let me put it that way, to take a larger responsibility to make this happen. But now that we see the path and all the bottlenecks have been cleared, we have said to the banks, take this over and run with it. If there are any issues that come in the way, come back to us and we will make sure we take care of them for you. It is your job. You will be the ones to get the benefit of it. And of course, all Nigerians ultimately will be happier for it. Thank you.